Hey, good afternoon, Dark Horse Coin subscribers. Hope you're having a wonderful day. A lot of you know I do like to trade the US dollar, Canadian dollar. It's one of my favorite pairs. I like how it moves. So I typically, if I'm going to trade in the Forex market, I usually stick with that. So I'm just going over a trade. I did a bar replay so I can show you what I saw before taking this particular trade. So I saw this setup right here. Clearly, we had a nice little flag pattern that was holding up pretty well. We got multiple tests back in this structure area right here. All right, so what I was looking for was a break of this key area of resistance, and I was looking for a retest. All right, and those things did happen on the retest. I put in a couple long positions, and I wanted to take it up to this box area, which is nothing but the fib extension. So let's go ahead and just open up the fibs, bring it the extension tool up. We're gonna bring it back down, and you see how it sits right in there. So I already drew the box, but you see this is how I got my targets, right? So we just keep it simple. Now, what I want to do is, all right, once this breaks, okay, I put my stop loss below this structure area uh, to be safe, all right? And um, I stayed in the trade, right? I actually closed my phone. I kept moving, and when I came back, everything was on point. So I didn't really sit here and watch. I typically don't like to sit and watch a trade. I usually take a trade, close the computer on my phone or browser, and I keep it moving. All right, so we're looking for the conditions. I'm looking for a retest of this area of support. Remember, when resistance is broken, now becomes a new support. So let's see what we got. All right, boom. Now, so it moves so fast. We got the break. Then we see right here we had the what? The retest. So let's do this. I didn't mean to do that. Hold on. Let's do this. Whoa, whoa. Get out of there. All right, let's cancel this out. All right. So let's go to a bigger screen. All right, here we go. All right. Also, if you hear my kids, they're outside playing. So they out for fall break. All right, see this green counter broke, and then we had this retest of the area, right? And we had another retest. All right, so we're on the hourly chart. So this was a area where I wanted price to come back, and it gave me opportunity to take this trade. Now my stop loss was actually on this one. All right, on this candle, below this candle. So I go ahead and I draw that out for you where my stop loss was. And what we try to, so the stop loss was below here. Okay. So this is a technique I've learned is that the candle that was engulfed, so if this candle was engulfed by another one, you will put your stop loss below the candle that was engulfed. If you play a one bar stop loss rule, you will fare much better in this game in the long run because you're not setting stop losses so far away that it's eating up your account if it gets hit. If my stop loss gets hit here, I'm fine. Okay, that's fine. Live to see another day. All right, clearly first target's hit. You already seen. We got a trade here. All right. Our ultimate. This is target number one. Target number two is up here. All right. So now we're back in real time and we're getting close. We're close to move. I've already secured profit. All right. So my profit zone was midway in. I was really right here at structure. So I'm right here. All right. So that is where I got out at. Okay. I could have got out here, but I got it here because I looked left. It was a great area market structure. All right. So this was pretty well. Now, how many pips was that? We got in at this point here. All right, so that was a great 49, almost 50 pip move. Standard lot size, almost $500. All right, so just keep it simple. That's what we did. All right, now let's say the stop loss was hit. Okay, remember, we got in here. We're going to put it below here. All right, so we're talking about a 19 pip, 20 pip. So taking the standard, it'd be 200. So you're risking 200 to make 500. That's how you gotta look at it. Okay, but you gotta live with if that stop loss get hit. You gotta live with it. If you don't want to lose $200, then you got to reduce your exposure, meaning you gotta take a less lot size. So maybe you want, I don't know, let's say you do 50 cent lot size. So what was that? 20 pips. So you would have lost $10. That's fine. All right. Rather you lose $10, right? But also because it went up to almost 50, you can make $25. So you basically risking $10 to make $25. That's not a bad risk reward ratio. All right. So just showing you the trade I took earlier, how it was doing. I'm just gonna go take a peek at crypto right quick, see what's going on. I think I might look at the SP 500 as well too for stocks. But once you know how to do technical analysis, it doesn't matter what market. You can trade any market on the world. All right. We are on a daily. I don't see anything major at the point right now. All right. If I were in this market right now, here we go. All right. That's the level. All right. I want to see a green candle engulf this candle. Okay. Um, However, I don't like this particular setup. It still screams more bearishness, if anything. Uh, so I wouldn't really be if I was trading. I wouldn't be looking for any major trade opportunities at this point, um, because what we call traffic is too much traffic to the left right now. So what I mean by that is, let's say we did engulf this red candle and we start to get a little bit of green. I got to worry about this. I got to worry about this, and I got to worry about this. So this is what I'm already seeing. I'm seeing that I don't have clean traffic of running. I got that area. I'm sorry, wrong one. I got this area. Sorry about that. All right, we're gonna move this one, and I got that area right there, and I have this area. All right, so now you see what I'm saying. It's not clean traffic. I got too many wicks that stand in the way to where it could be a lot of rejection and turning points to consume lower. So what we do is we throw on the moving averages. All right. Price is below all three moving averages, which suggests that we're still in bearish territory. So therefore, I would not be looking for any buying opportunities in here. Instead, I'll be looking for retesting key areas to resume lower. Okay. 90% of losses in any market is due to people going against the moving averages that's suggesting that we're in a bearish. All right. Don't go against the trend. All right. So we can take those out. I can put the Bollinger's in. All right. Yeah. We're down at the bottom. Typically, we try to move to get back to the medium. Yeah. You may see a nice opportunity to get a little bit of short term gains to back up. But this is Bitcoin. Unless you're using a lot of leverage, this is not worth it to take. But there are some opportunities. Maybe you can go on a lower time frame and see some opportunities, say the 15-minute or so. And yeah, so we'll, all right. If we're going long, we just want to. I want to see another candle eliminate this red. Simple as that. We didn't eliminate this one. All right. So that's it. And if you were looking to go short, you just want to see a candle eliminate this green, red. Simple. Just keep it very, very simple, guys. All right. So look at the S&P, and that'll conclude this video. I'll keep you long today. Uh, all right. We got a gap down for this morning. All right. Now, since we had a gap down, we do want to keep out this area in mind. All right. Typically, we want to see an asset try to come back in and fill that gap. What do you look right here? All right. You see this gap? What happened? Price was filled, right? So a gap down. Okay. And we can stretch this across. But look what happened. We finally got up here to make it smooth. So if I was going back in time, what I would have done was with this red candle right here, I would have had a what? Resistance point. And I'm looking for what? I'm looking for opportunities to go get back up here in structure. Okay. So look what happened. Green candle did what? Engulfed this red. Okay. So we're looking to what? Ride it back. And we got a what? A mini bull flag right here. Okay. Now watch this. We can do all this. We can go back. Let's go back to time. Bam. All right. We're here. We'll see a gap. Okay. Got a nice move. Let's say you missed this move right here. That's okay. What we're going to do is we're going to just use our extension tool. We're going to measure this flagpole right here. We're going to bring it back down right here. And we're then going to put our box right here. All right. And that's our targets. Okay. We're going to be looking for buying opportunities since we're bouncing off this key level of so we'll do this. Do that with support. All right, here we go. We're going to stay in this little box right there. Boom. All right, and we're going to. All right, so this is called like a box strategy. You can call this a bullish flag, whatever. We just use the box. It's just simple. All right, it just keeps everything simple. Right, we're in a box, and we can measure it like this. You can set it here. All right, you see, this could be your target. I use the fib extension. You don't have to. You can measure the pole, or you get the secondary target. You put it on top. All right, this is the next target up top that you can get. All right, and we just go ahead and add this from market structure all the way through. All right, and let's see if this thing plays out. If we would have saw this structure back on this particular date, let's hit play. Okay, targets hit. First wave based off of this movement. Go. So our first wave target hit. All right. The second, which was your extreme, that was not accomplished. That's fine. Okay. You always want to go off the first one anyway. The second one is just hopeful. All right. So this is good. Now, look what we have going on now. We had this gap. All right. What are we looking? Look where we're looking at. All right. This possibly still could be what we call a flat pattern, a bear flat pattern, but to the downside. Okay. So we just want to be careful. We really want to see how what price reacts to this level now. Are we going to break? I'm really love it if we break this because we got what? Clean traffic, meaning that the only thing I'm gonna have to really worry about is just this right here, which is fine. However, I feel confident, but once we get in this area, we can go ahead and close this gap. Okay. So this is what we want to see. Do you jump in and trade now? No, it's not giving me anything to do. All right. I'm in no man's land. For other people who got different trading strategies, it may be. Okay, what are we doing? If we break below here, we got two ways to trade this. You take the initial, which is the most aggressive and riskier, or you wait for a retest. Right? So it'll look like this. You get a what? Break, retest, and then a completion. Okay. All right. So remember, the retest is more so for conservative traders. All right. Same thing here. It can break, retest, and then go and fill targets. Okay, so it depends on how you are. If you're a conservative trader, if you're a riskier trader, that's how you would take it. All right. If it does break, I like it to the downside. Reason why is because this is clean traffic. Okay. Even though this is just an hourly, you want a little bit more upside potential, but this is enough because this is solid. And then I just got this wick, so I don't have a lot of pullbacks. We could just get strictly there. Okay, so we like that. Also going up, look right here. There wasn't a lot of traffic. Okay, once we break here, there's not a lot of traffic. We had this little area, and look what happened. Price what? It stopped at this area. So remember, when we look left, we want to look at stopping points. Okay, this is a stopping point because of this structure. So price hung around in here and it finally took off. So that's what we mean by clean traffic if you look left. Okay. Then when we got here, we had some pretty good clean traffic, even though we did have some retests, but we felt confident that it actually can get to those levels. Okay. So I'm not going to bore you, not going to keep you long. I hope this little video helps. Stay simple with your trading. Make sure you're using great risk management. Focus, guys. Focus on one thing. Find one instrument you want to trade to do it over and over again. Try to get 20 trades under your belt. Look at those 20, see what you did right and wrong, correct your errors, keep it moving. If for whatever reason you're not successful in making money off of 20 trades, then you have to either recalibrate, get rid of that system. Something that has to be tweaked. It's more than likely it's your risk management and your psychology that's off. Every system out there works. Every last one of them works, but every last one of them is not 100%. You're going to have losers, right? The way you stay in this game is that you cannot have your losers get to a point where your profitability is not there. You get what I'm saying? So you want to make sure your profitability is there. You should be able to lose 60% of your losses, right? You got 60% losses. The 40% is still good enough to be profitable. Even 30% you profitable if your risk reward is correct. All right. So imagine somebody who lost 80%, but their 20% they still were very, very profitable. That happens. You have some people who have multi-million dollar portfolios that they are very impatient with losers. They cut them short. So they got a lot of 80% of micro losses. But that 20%, when they run, and it make up for all those 8 losses if you took 10. So that's 80%. If you told someone that, hey, I got an 80% failure rate and only got a 20% success rate, but I'm profitable, you'd be like, something's wrong. It don't sound right. But in trading, that makes a lot of sense because there are some people who are 80% correct and only 20% wrong. The problem is that 20% wrong is so massive that it engulfs all their winnings and they're not a profitable trader. So how is that? How is it that you can be a successful and win ratio trader but not profitable? You be like the person 80% right, but how they're not profitable? Because of risk reward management. Right? So that 20% of losses is wiping out 80% of their gains. So I hope that helps. Smash the like button, subscribe. Also remember, guys, Dark Horse Coins, October 1st, we're closing membership. We're gaining on 600 something members. All right. And it's taking forever to load. All right. So come over, get the lifetime membership, one-time fee. All right. We're still going to be giving a lot of value in our members area, but we want to close it because we don't want too many. We really want to focus on giving value. We will be having some other digital downloads and content available after we close membership. So you still will have access to some of the things that we're looking to put out, but we still do Zooms, live Zooms, meetups, other discounts on actual live classes of education, such as learning how to do market structure, things like that. So here's some of the things that we have. A lot of our investment plans and strategies and whatnot that we have in here. So, like I said, come join us. Like I said, hit the subscribe button, the like, and I hope y'all have a wonderful day.